All right. We are back with another episode of the Real Estate Investing Club. Today we have Benson Juarez with us. Benson is the managing partner at Privy. He is an accomplished entrepreneur with 20 years experience in real estate. He has co-founded several companies and is currently a licensed agent, investor, and a managing partner at Privy. This is going to be super exciting because Privy is a data platform, and every deal starts with finding good deals. So Benson is going to help us go through the data side of things and how to go out there and find good deals and make sure those are actually good deals. So I'm super excited about this, Benson. Thank you very much for hopping on the show.
Thanks for having me, Gabe. I'm excited too.
Absolutely. I told you before we got on here, we like to start with stories. I'm sure you got a good one. So why don't you take us back to the beginning? How'd you get started in real estate?
I got started in real estate back in 2001. I was I'd just been activated after 9/11 to the military. I was in the reserves for 6 years
Okay.
and got launched into, active duty after obviously 9/11 and the towers came down. So, I was traveling around the world, going to different places. And, I've always had a lot of interest in real estate investing. I've always been an entrepreneur. I've either never worked for anybody else but myself, or I worked for the government. That was like the two extremes, right? So it's like full,
Full
you know,
control, no
full
control.
control, no control. And I've been able to kind of tiptoe that line because I'm like an all-in kind of guy. And so when 9/11 came, I'm like, all right, this is me for the next 2+ years, right? And so, during downtime, I was either reading or listening to tapes, or, you can tell how old I am. I said tapes, not CDs, right? And way back then, it was like the Carlton Sheets was like the gurus of the time, and the Robert Allens and the Ron LeGrands. And so these were the guys I was listening to. And I had that fire in me to go from just doing, like, at the time I was coming out of retail. I ran nutrition stores, like kind of like
Okay.
GNC.
Oh, fun.
But I implemented a consultation element. So it was called one-on-one nutrition. So you came in, we would teach you all of the things you needed. We'd give you workout programs and nutrition calendars and food plans, and then we would sell you all the stuff that went with it. And so I've always used that kind of like consultative element in my businesses along the way, not just like selling just a service or a product. And we still do today with Privy. But I was transitioning to, like, okay, now I want to, invest in real estate. So I was educating myself. And after I had gotten back from, I was in Kosovo for 6 months. I was back in Colorado at the air base there, and I got to go home at night, right? Well, not at night, during the day. I was working nights. And
Okay.
so a buddy of mine was selling loans, and he's like, "Man, I know you're a hustler. You want to sell some loans with me?" And I'm like, "Yeah, I need some cash flow so I can start doing some deals." And so I was going selling loans during the day, and then I go to the base at night and protect our assets. And then I just turned that into a thing. And before I knew it, I had started a mortgage company. I was doing hard money loans, and I was flipping properties before I
Oh,
was even
wow.
out of the military,
Okay.
and just on the side. So that's how I got started.
All right. I love it. So you got started on the loan side, it sounded like,
I did.
which is pretty unique. And how long did it go? Did it take you to go from, originating loans to doing your own flips?
I wish I knew the exact timeline. I would say probably I was wholesaling shortly
Oh, okay.
thereafter.
Yeah.
Um, Probably my first flip within a year.
Okay. Okay. And
Yeah.
yeah, I mean, that's a lot of people when they get started in real estate, they start in wholesaling. Obviously, I started in wholesaling, but the difficult part is finding the capital, especially when you're just getting started. I'm sure you're in your early mid 20s, trying to do your deals. You don't have a lot of money to your name, but if
Yeah.
you come with a background in mortgage origination, you know how to access the capital. You know how everything is already started, and so that's probably a good way to get going. From there, now you're at Privy and you guys are a data platform, a data software for real estate. Um, so how did you go from doing those flips, doing the mortgages, to starting Privy?
So right around the time of the downturn in the market, right? So this was, late 2000s. I had built a decent sized portfolio for me, at least. It was worth a few $1 million. It was like 7 or 8 properties, rental properties. And the strategy that we were doing was we were buying properties, fixing them up, and then refinancing them and pulling as much cash out and then doing the next deal, and then doing the
Good
next
old
deal.
Burr strategy. Yeah.
Right, doing the burr. And but then the market crashed, right? So, I we took, pretty hard lick in our portfolio, and I lost some properties through foreclosure and kind of had to figure some things out. And at the time I was licensed as an agent, the state at that point had made us choose to whether we were going to be a licensed mortgage broker or licensed agent. And I decided to go
Oh,
down the
interesting.
agent route.
Okay.
They didn't want us doing both. For many years,
Right.
I was doing both.
Right.
So I was like a one-stop shop, like you come to us, we'll help you
Get you
find
your
your
loan,
house,
get you your
sell your
house.
house,
Yep.
get your loan, everything. We were vertically integrating everywhere we could. Um, and then once the market, the bottom fell out, then I reinvented myself and I'm like, okay, I'm going to focus on REOs. So I positioned myself as a buyer's agent for REO brokerages because they had all the good inventory.
Hmm.
And I wanted first look at that inventory. And so I'm like, well, I'll sell, you know, well, there was several different brokerages that were doing it, but I would set myself up at a place. This woman named Lisa Blake, for example, she had hundreds of listings at any given time.
Oh,
And
wow.
so I went to Lisa. I'm like, listen, Lisa, I know how to cultivate the leads that are coming in off these signs, and I'll turn them into leads for you, and we'll just do a rev split. And then I went to another brokerage that did it. It was called the Mercury Alliance, and that's where I met my partner Scott, and I was doing it there as well. But what I found was, and this is just kind of real estate in general, is that like you can only serve so many clients effectively at once before you start dropping balls.
Oh, yeah, for sure.
And when I had all these calls coming in, I was doing everything manually. Like at that point in time, I had 6 or 7 years experience, and I was licensed, I had the MLS, but even having all of that, I still had a limit to who I could support and also find deals for myself. And so the conversation in the office with Scott was like, how do we automate this process? How can we scale effectively, not just with our own deals, but potentially even doing stuff outside the state? And Privy was really born out of those problems that we were having in our own business. We actually never intended on selling the software as a consumer product. It was just built to solve problems that we were facing every day, to get consistent deal flow and being able to analyze properties quickly,
Yeah.
algorithmically, and then also be
Especially,
able to take action.
yeah, and that's when I'm in commercial now, we do self-storage. But when I was doing single family, that was the thing that I felt really bogged down the process was you can get all these leads, but then you have to analyze them all. And doing the underwriting on all these different leads from scratch using Excel, it just, it doesn't take long individually, but when you have to do it so many times over and over and over again, it really bogs down the process. So that makes a lot of sense. It sounds like that was the problem that you guys were trying to solve.
It was, yeah. So, the very first MLS that we got was RE Colorado, and that was in Denver. And this was before there was any sort of normalization of data sets nationwide.
Mm,
But at that time, NAR was putting an initiative down to all of their MLSs that was going to basically make the data sets congruent throughout all of the MLSs, so they could provide products so vendors could create products based off of their data set. And so we were actually the first guinea pig in Colorado when that started, and it was a way for us to get our foot in the door. And now we've got over 80 direct to MLS data contracts, and we've got another 30 or so in the queue. But we've really kind of dug a moat around our company with that data set because it's almost impossible to get. And
and
you
what
really
is
have to go through.
real quick, what is direct to MLS? When you say that, what do you mean?
So we have to. So if you're familiar with like a prop stream or like a bad
Yep, yep,
leads,
yep.
like the great companies, they do a lot of really well things really well, but none of those companies have MLS data. It's all aggregated or it comes from other
From
sources.
like counties and et cetera, et cetera.
Well, counties, that's actually a completely different data set. That's like the public record data set.
Okay.
Um, Anybody can buy that in volume on
Hmm.
mass from
Right.
like these big companies out there. You probably know of some of them, um, but nobody can get access to MLS data.
Mm.
You actually have to go and directly. negotiate that with each MLS. And so
Right.
we've done that over the years. Ours was, the first one in Colorado, but um, it's in a business where numbers matter. You can't be loosey goosey with where you're getting your information. You don't want to be going to Zillow to pull
Yeah.
comps,
Always.
right?
I really wish Zillow didn't exist because they're always overpriced. And so sellers will go there and be like, no, my house is worth 20% over what it's actually worth. Don't worry
Right.
about it.
Well, and they have what's called their Zestimate, right? The Zestimate
Mhm.
is an AVM, or an automated valuation model. So it's an
Mhm.
algorithm that basically takes all the sales data and then compiles an estimated value of a home. And even I think in their own disclaimer, it says that they're off like 20 to 30%,
Yeah.
which makes it completely useless, right?
Right. Yeah.
And we know how bad their algorithm is. And they're $1 billion company, by the way.
Right.
And their
They should be
algorithm is
better.
that bad, right? Which actually proves more than that it they're not bad themselves. It's just that's the limitation of what you can do with that kind of data,
Right.
is that to zero in on an actual valuation or an after repair value is really hard without actually getting someone's eyes on it. Now,
Right.
times are
You have to know
changing with
the
artificial
condition of the
intelligence.
property, all that stuff. Yeah.
Right. The condition is a big part of it. So um, AVMs don't work. So it was always something we understood when we came into the space, is that we're not going to go and try to tell you what a property's worth. But what we're going to do is we're going to use an algorithm to build a comparative market analysis, show you all the data, and then say, here's the house that was fixed and flipped and sold next door. It's the same as your house. That's your after repair value, right? And so what we've been able to do is to help people understand values much better in this investment space by making sure we track every single investment deal, and then making sure we're comparing apples to apples and oranges to oranges. And so we're able to help them translate an as is value to an after repair value by reverse engineering the whole real estate investment data set.
Nice. I love it. So yeah, it sounds like, I mean, you built this out of your own pain, which is something that is great to start from. You know, obviously you need to be solving problems when you're building software solutions. Once you had the solution kind of in place, how did it help your own, not the software itself business, but your own real estate business? It sounds like you're doing flips, you're in the market. How did you, have you guys really expanded on that side? Have you utilized this same data to really build it out, or how has that gone?
It was an interesting journey. Like, I really got skittish about real estate investing. I mean, it hit me, hard
Oh yeah,
financially.
2008. Yeah.
And so I really didn't do much up until like the last couple years. I was
Okay.
just, I had a couple of real estate, like rental, just basic rental properties in Colorado, real basic stuff. Um, and so I was like, every day I teach people how to do real estate investing. We got tons of successful people. And I'm like, I just need to get back in the game. Right. So for the last couple of years, I've really been pushing hard and been able to acquire some rental properties and do more wholesaling. But there was a gap there where I was gun shy. I really was gun shy from what had happened to me in the late 2000s. And you know, with Privy, I felt comfortable. But what I was also able to do was I was also able to recognize that I lived in a crappy market.
Mm,
And what most investors do, and this is what their coaches and their mentors and YouTube University teaches them, is you look for deals where you live. And if you live in a crappy market, you're not going to be able to take that market and make it good with a certain strategy that you might be employing. Like, I believe that what list you pull, what software you use, whether it's Privy or some other software, who your mentor or your coach is, or if you're doing wholesale fix and flip, all that stuff matters less than where you're looking for deals.
yep.
If you're looking, especially wholesale or anything that's based off of ARV, if you live in Cody, Wyoming, and you decide you want to be a wholesaler, well,
Good
you're
luck.
going to be done in 3 months.
Right.
You're going to be out of the business. Okay. And that's just because the ingredients to build a deal are not present in a lot of these most rural areas.
Yep.
And even in some of these areas like, I don't even know, like Wichita, Kansas. Like, could you stumble into a couple of deals in Wichita? Yeah. Could you build a business around it? Probably not, especially if you're newer. Like the people that are maybe having success in Wichita, like they've really cut their teeth and they've carved a niche for themselves over years, and they've dominating that market. What they should be doing is leveraging the data. And so we track every investment property nationwide, and we say, don't look where you live unless the data says to look there.
Yeah.
So I can say, okay, here's all the areas in the U.S. that have the highest investment activity. That's where the data is for you to be able to prove ARV, because you literally can't prove ARV on a house unless you have a comp that's flipped.
Yeah.
When an appraiser, you could do the best, most perfect renovation you've ever seen. It could rival something you saw on HGTV. And then when that appraiser gets there to appraise it, and they have to use unrenovated comps, well, all of a sudden your value gets squashed. Will you
Right.
get a little bit of a bump? Yeah, you will for a little bit of a bump, because they're not idiots. They understand that there's labor and there's cost, but you're not going to get the maximum return on investment on that property because you chose the wrong area to do the flip in the first place. And that all trickles down.
Yep. And that was the next question I was going to ask. When it comes to investing, the market, as you said, matters so much. I mean, obviously you can find good deals anywhere, but it really does come down to the market. And so what do you guys look for? Actually, what are the signs of a healthy market from your perspective, from what you see in your data? What are the markets that you should be investing in?
Again, it comes down to investment activity, right? And it depends too on your extra strategy. But if you're measuring how good a deal is by the percentage of ARV, you have to be in an area where people are doing flips. Now, again, is it Kansas City, which is there's like 1,700 flips there in the last 12 months? Or is it Chicago, which there's over 4,000 flips that have happened in the last 12 months? There's a range there. You don't have to always go to the highest. You can build a successful business in Kansas City. But if I have the opportunity to invest anywhere, why would I choose a low or a middle end market based off the data, or choose the best market? And then now I don't have to go and do multiple KCs to get the volume I need to meet my financial goals.
So you're really looking for activity on the investment side. You're not looking for, net migration, employment,
No, that's
projected
irrelevant.
employment growth, all that kind of stuff.
No, well, that stuff does affect it, but it's secondary, right? So there's other indicators that are closer to me that I can understand, like
Right.
fix and flips are happening.
Yeah.
Now, does unemployment and migration and all that stuff affect the number of fix and flips that are happening? Yes, but I don't have to understand it. All I got to know is that there's 20 fix and flips in this neighborhood. And what that does is it turns every unrenovated home in that neighborhood into a deal, as long as it's priced right for the condition it's currently in.
Yep. That makes
So I don't,
sense.
and for new people, that education is easy. Like I can look at a map and all of a sudden I just see a big blue blob on the map. And I'm like, that's where I should look.
Yeah.
Who
I
cares about
love,
all these graphs and all these, scales and, economic forecasts? I mean, you can really get lost in that stuff and just never really understand what's going on, and it'll bog you down. So with us, we're like, okay, here's a heat map. Go to where you see big blue blobs.
and that is my favorite kind of data. I do love seeing numbers, but when somebody can take it and turn it into something like a Tableau type of presentation where you're just looking for colors, that's what I like to see, because then it makes it a lot easier when it comes down to making those decisions. I love everything you've said so far. I took a peek at the clock. We have run down our time, so we do need to move on to the quick question round. Are you ready?
Let's do it.
Let's do it. Starts with books or any form of education. Give me two recommendations, one for general life wisdom, one for real estate specific.
Mm. Well, I'm reading one right now that I really like, actually. Um, well, there's a handful. So, The Power of More.
Okay.
Um, that's a great book. For me, it's more about like an abundance mindset, and really just kind of thinking like there's always the ability to do more, and most of it is limiting beliefs, like getting out of my own way. Um, that's a book I like. Um, and God, I can see it right over here. I can't think of the title right now, but there's a book for business owners, that where the key part of it is figuring out where in the life cycle you are in the business. Are you a practitioner? where you're just doing the things that need to be get done every day? Are you a manager or are you an entrepreneur?
Oh, kind of like the E-Myth mastery.
It's the E-Myth.
Oh, there you
It's
go.
the E-Myth.
That's
That's
the
what it
book.
is. That's the book. Right. So that's the book I'm reading right now. And so I've gotten stuck in just being the one that's operating every day in the business. And I've lost sometimes the entrepreneurial perspective and being able to put the vision in place. Now, fortunately, I got a business partner who is the visionary, right? So I am kind of been in the integrator role just from how we've been doing things, and that has served me well. But now what I'm doing, I want to scale, right? So now I'm putting my entrepreneurial and visionary hat on to be able to scale my side of the business, which is business development and sales and strategic partnerships. And so the E-Myth for me has been a book that has been helping me a lot. And then that along with I've really recently brought on a coach. So now I've got a business coach which recommended the E-Myth book to me. And so that's working hand in hand just to help me scale up as a business partner and as a business owner to help get Privy to the next level.
Nice, man. I love it. Yeah, moving out of the initial role of being the executor and all the different roles is a difficult thing for any entrepreneur, but it is so crucial. And that's why VAs, we love talking about VAs on this show because
Mm-hmm.
that is the easiest way to get yourself out of there to start offloading the tasks to somebody else who can do it for you. So love that. I'm going to move us on to the next one. And this is for your younger self. So let's go back to the Benson who was just getting started. He was just doing that first loan right after getting back from the military. Look him in the eye, give him one piece of advice moving forward.
Mm. I would say really doing due diligence on business partners more thoroughly. I was too apt and able to jump into bed with somebody because I felt like they were bringing more to the table than I was. And I had certain things I was bringing like money and time, and I was leaning on their experience without really digging in and looking at background. Where do they come from? What's their experience? I didn't pull references. I ended up getting screwed by a business partner who stole a bunch of money from me and was my mentor essentially in the loan business.
Yeah.
And I lost a bunch of money because I did not do my due diligence. And so I didn't hold myself value high enough to think that I should go and make sure they were good enough for me. I
Yeah.
was trying to prove that I was good enough for them, and it ended up biting me in the butt. So if you're ever looking at strategic partnerships or just a partnership in general, like if it's friends or family, make sure you're really digging deep into who you're going to put your financial well-being with, and really be critical of it.
Yeah. Yeah. Partnerships are they're a difficult topic just because, like you said, it's like a mini marriage. Like it really does matter who you partner with. You guys have to have the same values and you have to be pointed in the same direction, have a mutual understanding of who does what and all that stuff. So, um, that is a good lesson for your younger self. I'm going to move us on to the next question, and this is about your business. We mentioned, scaling a business is about stepping out of that initial role of wearing all the hats and into the true entrepreneurial role. And to do that, you need to hire. So, what were the first three positions you hired for, and would you do it differently if you started again today?
Yeah, the very first position would have been a development. We got really lucky with our lead developer. And at the time, because we were such kind of a startup, we brought them on with an equity position. So that happens a lot in the kind of the startup world where, you don't have a lot of capital unless you've gone out and, raised, venture funds or angel funds. So you have to incentivize people to come on early. And with developers, having a piece of the pie is the best way to do it. We wouldn't have done that differently. We got lucky with just an amazing developer who can do the work of 10 overseas developers. And I found that out the hard way through another project I was in launching another technology company. So that was great. And then a couple of the other hires that we had early on were like salespeople.
Mm,
We were leaning too much on the commission. So people who were coming in and be like, oh yeah, I'll work for 100% commission or like small base, right? And then commission. And what we found is that the people that were available to do that were available for a reason.
Hmm.
It's because they didn't have jobs elsewhere.
Right.
And instead of kind of going in and making sure that they had good backgrounds in sales and business development and doing that sort of thing, we found out through trial and error that they didn't produce. And even though some of them came from big companies that we knew of, it just didn't translate. So I like the slow to hire, fast to fire philosophy now. And so we're doing more of that now.
Nice. Yep. I love it. All right, and that moves us to the question about metros. I mean, you guys deal with data all over the U.S. It sounds like, so this might be a good question for you. There's a lot of opportunity out there, a lot of square miles. So, give me one metro you are most excited about investing in today.
So based off the data, right now, the hottest market is the greater Philadelphia market.
Philly, interesting. I was going to say
Yep.
Jacksonville, but Philly, okay.
Yep. Philly has a little over 5,000 flips that have happened in the last 12 months up there. Now, again, this isn't to say you have to flip, but that's where the data is present to be able to put together a good deal with, the associated comping data, the buyers, the investment activity, and there's a ton of rentals in Philadelphia, South Philadelphia, where the Fresh Prince grew up, right?
I almost went into that, but I
Yeah,
stopped myself. Love it.
yeah. So
I'm
that's
honestly,
probably one of the hottest markets in the whole U.S.
yeah, I would not have guessed that. That's funny. Just out of curiosity, I live in Seattle. I'm sure that's a shit market, right? Just because the price points are so high and
It
the
is.
yeah.
I wouldn't spend any time there. If I was going to do anything on the West Coast, it'd be in Los Angeles County,
Huh,
um,
interesting. Okay.
right near Inglewood, where SoFi Stadium is,
Okay.
and right near USC. That's
Yeah.
the hottest market right there. It's where the 105 and the 110 cross, in all of the West Coast.
Okay. So if I were to make a generalization, a gross generalization, when it comes to identifying good markets for flips, it sounds like lower price point, um, major metros that have growth potential, like Indianapolis, Columbus, uh, Philadelphia. Obviously, these are the metros that make most sense when it comes to flips.
They do. Yeah, it attracts a lot more investment activity. And the more flips you have, the more data you have to be able to prove ARV to your buyers or to your appraisers. And then there's a snowball effect. And so a rising tide raises all ships. So even if there's fix and flip activity there, rental properties perform well in those areas too,
Yep.
because people want to live there. So the demand for rent goes up. The municipalities invest in infrastructure when there's a lot of fix and flips happening. Next thing you know, they're putting in new street lights, they're putting in new bus stops, they're paving the roads. There's a Starbucks pops up on the corner, there's a brewery down the street. Like all of those things start to happen when there's a lot of fix and flips, and that helps everybody in the community. Same thing with like short-term rentals. I'm actually sitting in a house that I bought virtually in St. Louis that I was going to wholesale, and I could have made about $10,000 on it. But as a short-term rental, after 3 months, everything will be cash flow on top of the 10 I would have made if I would have wholesaled it. And I was able to buy it for probably 30% of what it would cost in Denver.
Hmm. Wow. What are we're going on a tangent here, but what are the
Yeah.
price points in St. Louis? I know nothing about that
They're
market.
they're all over. This place I got was probably I could have turned into like right out of the gates in a rental for 150, but the ARV is around 290.
Oh wow. Okay.
And I've only put about $40,000 into it. But I'm closing on a property next week that I got for 40 grand.
Wow.
All I did was go in and clean
Jesus.
it up. And I filled a 40-yard dumpster with stuff, and I'm going to sell it for, I'm under contract for 55,000.
All
So
right.
long double close. I'll make 15 grand on it. And then someone's going to come in and flip it. And that ARV on that one is about 180.
Wow. Okay. That's great. And this is all in St. Louis.
St. Louis. Yep.
Cool. All right, I'm going to move us on. This is the quick question round that is long. We have no problems with this. It's my podcast. I make the rules.
There you go.
Moving on to the next one, and this is about strengths. We are all gifted with strengths that we uniquely provide this world. So, what is your Superman strength?
I think my Superman strength is the ability to build rapport quickly. So we all know about the know, like, and trust aspect before people want to do business with you. I feel like I have a way of just talking with people, and just my honesty comes out, and I think I can build rapport quickly with someone, and they're like, I want to do business with this person. I want to learn more. And I don't have to be as salesy, and I don't have to like boost my, oh, I'm good at this, I'm good at that. I don't have to sell myself. I just think it's more about like the dialogue and just talking to people, and having a back and forth and being genuinely interested in what they're doing. And that's worked really well for me. And that's why I think that we do well with strategic partnerships, and the way that we've aligned ourselves with a lot of the mentors and kind of the high level of partners that we have in place has been through me leveraging that superpower.
Nice. Yep. It all starts with relationships. Every business is
Mhm.
built on relationships. I feel like
Yep.
specifically real estate is very relationship heavy. So love to hear that. That is a good strength to have. That moves us on to the second to last question. This one is about mentors. We are none of us are islands. We all stand on the shoulders of giants. So who is one mentor who has contributed significantly to where you are today?
Hmm. Interesting. Um, it's a difficult question. I've had lots of people through the years that have been strong influences in me. I think probably where I was most open to mentorship is when I was in the military, and I had some sergeants that were just great influence on me, and kind of being like, okay, this snot nosed kid, like get in line, right? And so there was like a lot more structure there, but I have a couple sergeants in mind that along the way just pulled me along, helped me to become my best version of myself. Um, and but it was through the structure of the military, which
Yeah.
I think a lot of people could use, especially with today's youth, and kind of the willy nilliness of it.
Yeah.
I don't think that's a term. I just invented it. Um, but I just think a lot of people can use that structure.
Yep. Yeah, and those initial influences, initial mentors that happen in your, late teens, early 20s, they make a huge impact on who you become. So that makes a lot of
Yeah.
sense. Shout out to those sergeants if they're still out there. Thanks for helping Benson get to where he is today. And that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What's the best way for them to do that?
Probably it's to go to my socials. So I've got TikTok. It's Benson REI, and then I also have an Instagram. It's Benson underscore REI. Those are probably the two best ways. I've got we've got a really robust YouTube channel with lots of training and videos there. And then if you want to learn more about Privy, our website is getprivynow.com.
Perfect. Getprivynow.com. And then also the socials. I will put all of that in the show notes. So if y'all want to reach out to Benson or get Privy Now, there you go. I will put those URLs in the show notes. Just click a little more in the description. It'll pull down the full description, and in there you can find those URLs. All right, Benson, that wraps it up. Thank
Amazing.
you very much for hopping on the show.
Thank you, Gabe. It was a lot of fun. Appreciate it.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, all we ask is you give us a like, thumbs up, all that jazz. That's the best way to support us. And then I hope you guys have an absolutely fantastic week. Keep rocking real estate. And I look forward to seeing you on the next episode.